Happy Tuesday. What's going on, guys? It's Ricky here with a super quick market update. Let's go ahead and jump right into it. So one of my biggest gains so far for the day has been SoFi. SoFi made a little bit over $4,000 on it yesterday, and today I'm a little bit over $6,000 on the day itself. Excuse me. The only other one that I'm actively watching right now is MSTR. I'm pretty much break even on that one. I'm up $100, but nothing crazy. And then on Hood, pretty much break even, a very light position. We're testing something new with LPP today. So for all those that are part of LPP, you know what I'm talking about. But the position size management approach is definitely working. And I'm really excited to see how everything plays out by the end of the week, even with all the craziness going on. So most importantly, NASDAQ market isn't really doing much. It looks like markets have given back all that they gained after the inflation report was released. Today, if you did not tune on in, yes, the CPI data report was released, and yes, it showed that inflation did come in higher in the month of June. Overall inflation came in at 2.9% and core inflation came in at 2.9%. This does support the case that inflation is actually going up. We went from 2.4% to 2.7%. So forecast was 2.6, meaning that overall CPI is coming in higher than what is expected. Yet, you still have Trump going on Truth Social or whatever it is that this is called. It says consumer prices low, bring down the rate cuts. And this is the one that cracks me up. I'm sorry, not this one. This is actually pretty good news for the overall market. Great deal for everybody just made with Indonesia. I dealt directly with their highly respected president. Details to follow. So supposedly a trade deal with Indonesia. In my opinion, not the most important, but something definitely to pay attention to. Fed should cut rates by 3 points. Very low inflation. $1 trillion a year would be saved. This is the part that baffles me, is the Federal Reserve's focus should not be to save the U.S. $1 trillion of interest payments because the U.S. decided to take out more money than it could afford to pay back. Just think about it. Think about how much of common sense. Imagine telling your credit card company, it is your fault that I pay so much in interest. Well, no, sir, it's because you don't know how to deal with debt. You take out more debt than you can afford, so that's why you have this interest that then you need to pay on a monthly basis. And yes, unfortunately, it is $1 trillion, and it could possibly be more if you end up refinancing. But that's not our problem. That's not the focus of the Federal Reserve. The focus of the Federal Reserve is monetary policy, to make sure that they maximize employment, and then have stable price stability. It's been made very clear. They are data dependent. They want inflation to be at 2%. But you will see everyone that likes to kiss Trump's ass. This is the part that just irritates me, is that why can't we just speak about the facts? There's a lot of times that there are good news, like the news about Indonesia today. Let's highlight the good news. No question about it. But when news isn't good, just highlight it as what it is. It's, oh man, yeah, inflation did go up from 2.4 to 2.7. You don't have to pretend like it's okay. You don't have to pretend like, oh no, it's actually going down. Well, it's actually doing the opposite of what the Federal Reserve wants. The Federal Reserve wants a 2% inflation rate. Are we working towards that? No. It's the opposite, right? If you actually look at the PDF of the most recent inflation rate and reading, you could see that based off of recent months. Let me pull it up here. It's one of the dot charts. Yeah, here we go. It shows since April, inflation has been actually on an uptick from 2.3 to 2.4 to 2.7. So inflation is actually going up since April based off of this reading. That's not an opinion, that's a fact. Now, it doesn't mean that the markets have to react in any specific way, but it also doesn't mean that you have to lie and say that, well, no, tariffs are not inflationary. No, it doesn't mean that inflation is at the 2% target, or that the Federal Reserve should be cutting rates, because they've made it very clear the data that they are looking for. They want inflation to go down and go down further, and data does not support it. It shows that inflation is going back up, and if this continues at this rate, we'll be at 3 to 4% inflation, which again is not what the Federal Reserve wants. So if they do begin to cut rates, which is inflationary, it will only act as a positive catalyst for inflation to drive inflation higher. And that is their biggest concern. So I'll do my part in making sure that I keep you guys up to date. Again, I like to talk about the good news, but I definitely do not mind highlighting the bad news. It's important in a market full of greed, as markets are trading at all-time highs, that you keep a level head, that you don't aggressively add to your positions at these levels or open a position at these levels without taking downside risk into consideration because of what people on Twitter are telling you. Just please, whenever it is that you choose to take a trade or an investment, don't just think about the upside, but zoom out and look at the downside. Is it worth the risk? A simple question to ask yourself. I'm super excited to follow up. I'll do my part in keeping you guys up to date. It looks like I'm about to hit $7,000 on the day for SoFi. Again, if you want to join my LPP team, we have an amazing challenge going on this week, especially for beginners. That's what it's designed for. And you get to watch me trade live every single day. It's a one-time payment, lifetime access. If you ever want to tune on in, second link in the description down below. And again, I'll see you tomorrow at Market Open for our live session. Like always, let's make sure that we end the year on a green note. Take care, team.